What if the money in your bank account suddenly had an expiration date? What if your ability to buy gas, groceries, or even a plane ticket could be switched off in an instant? This isn't a bad movie plot. This is the potential reality of a government-run digital dollar. For years, this idea has been creeping from the edges of economic theory into the center of government planning. They call it a Central Bank Digital Currency, or CBDC. The government and its allies in the financial world claim it's all about efficiency, innovation, and helping people left behind by the current system. But what if it's actually the greatest shift of power from you to the state in our lifetime? This isn't just about a new way to pay. It's about completely re-engineering what money is, and in doing so, rewriting the relationship between you and your government. Today we're holding an urgent briefing. We're pulling back the curtain to show you what's really happening behind the closed doors of the Federal Reserve and in the halls of Washington. First, we'll look at the official sales pitch, the incredible benefits they claim a digital dollar will bring. Then we'll break down what they're not telling you, the terrifying risks and the fine print that could change the meaning of freedom forever. Finally, we'll cover the dramatic political chess moves that have turned this from a far-off idea into a present-day battle for control. Stick with me, because what you're about to learn will change how you see the money in your pocket and the future of your financial freedom. Before we get into the profound risks, you need to understand the arguments for a digital dollar. To be fair, the people pushing for this aren't all villains plotting world domination. Many are economists and policymakers who truly believe a CBDC can solve some of America's oldest financial problems. If you listen to the Federal Reserve, the Treasury Department, or global institutions like the World Economic Forum, they paint a very attractive picture of a better financial future built on three main ideas. The first, and maybe the most noble sounding, is financial inclusion. Right now in the United States, millions of people are unbanked or underbanked. They don't have access to basic financial services and often have to rely on expensive options like check cashing stores and payday loans. Proponents argue a digital dollar could be a game changer for these communities. By creating a system where anyone with a simple digital wallet on a smartphone can receive and send money, you could bring millions of people into the formal financial system. The idea is that a digital dollar would slash transaction costs and remove old barriers. No need for a physical bank, no minimum balance fees, and maybe even easier identity verification. Imagine government payments like a tax refund or stimulus check showing up instantly in your digital wallet. No bank account needed, no waiting for a paper check in the mail. For low-income families, this could be a lifeline. It's a powerful humanitarian argument. The second pillar is all about efficiency, speed, and safety. For all its techie shine, our current payment system is surprisingly old-fashioned. When you swipe a credit card, the money doesn't move right away. It travels through a complicated web of banks, payment processors, and clearinghouses. This can take days to fully settle, with fees at every step. Sending money overseas is even slower and more expensive. A digital dollar, they say, would be like a public highway for payments. It would allow for instant direct transfers. Sending money to a friend or paying a local shop would be as quick and cheap as sending a text. A CBDC would also be the safest form of digital money out there. Unlike money in your bank account, which is a liability of a commercial bank, or a stablecoin, which is a liability of a private company, a digital dollar would be a direct liability of the Federal Reserve. It would have zero credit risk and zero liquidity risk. In an era of shaky cryptocurrencies, the promise of a risk-free digital asset backed by the full faith and credit of the United States is a major selling point. The third pillar is about maintaining America's global power and improving economic policy. For decades, the US dollar has been the world's reserve currency. This gives America huge economic and geopolitical influence. But that dominance is being challenged. China, for instance, has been aggressively rolling out its own CBDC, the digital yuan. Supporters of a US digital dollar warn that if America falls behind in this race, it risks giving up its financial leadership to rivals. They argue a digital dollar is essential to modernize our currency and keep it at the center of global trade. Domestically, a CBDC could also give the government powerful new tools. Policymakers could see in real time how money is moving through the economy, allowing for more precise adjustments. In a crisis, the government could send money directly to households and businesses. Some even talk about smart contracts where money could be programmed for specific uses, like making sure disaster relief funds are only spent on essential goods. Financial inclusion, faster and safer payments, and preserving American power. That's the official story. It's a vision of a modern, efficient, and fair financial system. And on the surface, it sounds not just reasonable, but pretty great. If that's all there was to it, this would be a very short video. But that's not the whole story, not even close. Now let's talk about what they're not telling you. Let's pull back the curtain on the other side of the digital dollar, the side that has nothing to do with freedom and everything to do with control. So, if it's all about faster payments and helping the unbanked, what's the big deal? The problem isn't what a digital dollar is, a line of code representing a dollar, but what it makes possible. The very design that creates all those benefits is the same design that could create a system of financial surveillance and control that would make George Orwell blush. The most dangerous idea hidden inside the promise of a digital dollar is called programmable money. This is the feature that turns money from a neutral tool into a direct instrument of social and political engineering. Think about the money you have right now. A dollar is a dollar. You can spend it on whatever you want, whenever you want, without asking for permission. It doesn't judge what you buy. Programmable money changes all of that. Because a CBDC is a government-run ledger, the rules governing that money can be rewritten at any time. This isn't a flaw, it's a feature. Imagine this. To fight climate change, the government programs the digital dollar so you can only buy a certain amount of gas each month. Once you hit your limit, your money just stops working at the pump. Or imagine during a health crisis, your digital dollars are programmed to only be spendable on essential items, preventing you from buying a book, a bottle of wine, or a plane ticket. This isn't science fiction. It's the logical conclusion of programmable currency. They could program stimulus money with an expiration date. If you don't spend it in 30 days, it could just vanish from your wallet, forcing you to spend instead of save. They could even link it to your social behavior, share an article the government calls misinformation. Maybe your ability to donate to a political cause gets temporarily switched off. This leads us to the second, equally terrifying risk, the total destruction of financial privacy. Unlike cash, which is anonymous, a CBDC would, by design, create a permanent government record of every single transaction you ever make. Every coffee, every book, every subscription, every donation, all logged in a central database tied directly to you. Most proposed models link a digital dollar to a digital ID. This creates a direct pipeline from who you are to what you do with your money. The government wouldn't need to ask a bank for your records. They would own a live feed of your financial life. This is a head-on threat to our Fourth Amendment rights against unreasonable searches. With a CBDC, the government isn't searching your records, it owns them from the start. If you think this is an exaggeration, we don't have to guess. We just have to look at what has already happened. In 2022, during the trucker protests in Canada, the government took an unprecedented step. Using the Emergencies Act, they ordered financial institutions to freeze the bank accounts of protesters and even people who just donated to their cause. Regardless of where you stand on the protests, this was a watershed moment. Financial access was cut off without due process, turning the banking system into a tool to silence dissent. A significant number of accounts were frozen, leaving people unable to pay their bills or buy food. Now imagine how much easier and faster that would have been with a CBDC. The government wouldn't need to order the banks. They could just flip a switch themselves. Then there's China. The Chinese Communist Party is years ahead with its digital yuan, and it's not just for payments. It's a key part of the state's social control machine. China is actively integrating the digital yuan with its social credit system. In China, what you do and say can be monitored and scored. A low score can get you blacklisted, blocking you from buying plane or train tickets. The digital yuan makes this system even more powerful. While the system is still being rolled out, reports have detailed scenarios where the currency could be used to enforce state-mandated behavior. This is the ultimate vision of a CBDC in an authoritarian state, a tool for absolute obedience where financial access is a privilege, not a right. Proponents in the West will say, "Don't worry, we'd build in privacy protections. This is America, not China." But we have to ask a serious question. Do we trust our government, any government, present or future, with this kind of power? Power once created is almost never given back. And in the next crisis, a pandemic, a war, a financial collapse, the temptation to use that power will be enormous. A system built for convenience can become a system of control in the blink of an eye. This isn't just a theory. For the past few years, a quiet but fierce battle has been raging in Washington over the future of the American dollar. The push for a CBDC was building steam, backed by a clear paper trail of government action, but it's now facing powerful resistance. The modern push really took off in March of 2022 when President Biden issued Executive Order 14067. This order put the highest urgency on research and development for a U.S. CBDC. It was a clear signal from the White House that the digital dollar was now a top policy priority. Behind the scenes, the technical groundwork was already being laid by Project Hamilton, a joint venture between the Federal Reserve Bank of Boston and MIT's Digital Currency Initiative. While officially just an exploratory study, its findings were stunning. The project proved a system could be built to handle over 1 million transactions per second, far more than existing payment networks. The key takeaway wasn't about privacy features, it was proof of concept. Project Hamilton showed that the technology for a high-speed, centralized digital dollar was officially here. As the technology proved feasible and the executive branch pushed forward, alarm bells went off in Congress. A strong counter-movement grew, arguing that a CBDC is a direct threat to American liberty. This led to the CBDC Anti-Surveillance State Act. Spearheaded by lawmakers like Majority Whip Tom Emmer, the bill aims to stop the Federal Reserve from issuing a CBDC directly to individuals or using it as a tool of monetary policy. In a major political statement in July 2025, the U.S. House of Representatives passed the act. While this was a huge victory for opponents, the bill's fate in the Senate remains uncertain, so the fight is far from over. At the same time, another critical piece of legislation took center stage: the Genius Act. This wasn't just a discussion. On July 18th, 2025, President Trump signed the Guiding and Establishing National Innovation for U.S. Stablecoins Genius Act into law. This landmark law creates a federal regulatory framework for privately issued dollar-backed stablecoins. It requires them to be backed one-to-one by cash or short-term treasuries, bringing rules and legitimacy to the private sector. This all led to the most dramatic reversal in the saga. On January 23, 2025, President Trump signed a sweeping executive order titled Strengthening American Leadership in Digital Financial Technology. This order did two huge things. First, it explicitly prohibited federal agencies from establishing, issuing, or promoting a CBDC, calling it a dangerous threat to freedom. But the order didn't just ban a government CBDC. It also set a clear policy to promote the development of private sector digital assets, especially the kind of regulated stablecoins covered by the new Genius Act. This marks a massive policy choice: reject a state-run digital dollar and instead embrace a market-driven private sector alternative. The political pressure grew so intense that even the head of the Federal Reserve changed his tune. In testimony before the Senate Banking Committee in February 2025, Fed Chair Jerome Powell, who had overseen years of CBDC research, made a stunning commitment. When asked directly if he would commit to never issuing a CBDC while in charge, he gave a simple, clear answer: yes. For opponents, this was a landmark moment, a public vow from the head of the central bank that the project was, for now, dead on arrival. So where does that leave us? The technology is ready. A previous administration was pushing it hard. The current administration and the House have banned it, and the Fed chair has sworn it off. It might feel like the threat is gone, but it would be dangerously naive to think this is over. The global pressures are still there. The arguments for efficiency haven't vanished, and the technology is just sitting on a shelf, waiting for the next crisis, the next administration, the next excuse to be unleashed. A battle has been won, but the war for financial freedom is far from over. While the debate over a digital dollar often focuses on personal freedom and privacy, there are also massive systemic risks that could shake the entire U.S. financial system. These aren't just technical glitches, they are fundamental threats to how our economy works. The first major risk is something called financial disintermediation. It's a fancy term for a simple and scary idea. What happens if everyone pulls their money out of regular banks at the same time? Right now, the banking system works because we deposit our money in commercial banks, like Chase, Bank of America, or a local credit union. Those banks then lend our deposits out as mortgages, car loans, and business loans. This lending is the lifeblood of the economy. Now, introduce a digital dollar. We've already established a CBDC would be the safest form of digital money, a direct liability of the Federal Reserve. If you had the choice between keeping your money in a commercial bank that could fail or a digital wallet with the Fed that cannot fail, where would you put your savings, especially during a time of economic fear? You and millions of others would likely move your money to the Fed. This would trigger a massive, silent bank run, draining capital from the commercial banking system. This would starve banks of the money they need to lend. The result? Credit would dry up. It would become much harder and more expensive to get a mortgage or a business loan. This wouldn't just hurt bankers. It would cripple economic growth for everyone. The American Bankers Association has warned that a CBDC would fundamentally rewire our banking and financial system by competing directly with bank deposits. The second systemic risk is a matter of national security, cybersecurity. A centralized digital currency system would be, without a doubt, the single most valuable target for cyber attacks in the history of the world. Imagine a single point of failure that, if compromised, could bring the entire U.S. economy to a dead stop. Our current financial system is decentralized in a sense. It's a network of thousands of institutions, which makes it resilient. An attack on one bank is a problem, but it doesn't take down the whole system. A CBDC, however, centralizes everything. A hostile country, a sophisticated terror group, or a brilliant hacker could focus all their resources on breaching that one central ledger. The consequences of a successful attack are almost unthinkable. They could steal funds, change records, or just shut the system down, causing mass panic and economic chaos. The Federal Reserve admits these risks, stating that a CBDC would face the same threats as current systems, but on an infinitely larger scale. Creating a system that is both easy to use and completely immune to attack from our most advanced enemies is a monumental task, and the price of failure would be catastrophic. So you have a system that could gut the private banking industry and create the ultimate honeypot for our nation's enemies. These aren't minor bugs. They are fundamental flaws in a centralized design that puts the stability of our entire financial world at risk. With all these risks to your freedom, your privacy, and the financial system itself, you have to ask, what can you do? The first step is what you're doing right now, understanding the stakes and refusing to accept the sanitized sales pitch. If you're getting value from this urgent briefing and want to stay ahead of these huge economic and political shifts, take a second to hit that subscribe button and turn on notifications. We are dedicated to decoding these complex topics so you can protect your wealth, privacy, and freedom. Your support helps us get this critical information to more people. So how do we handle this future? The conversation is often presented as a false choice. It's either our CBDC or their CBDC. It's a race between the US and China. And if we don't build our own version, we'll fall behind and let them set the rules. This framing is a dangerous trap. It funnels us toward accepting a government-controlled currency as inevitable, forcing us to just argue over the details. The real choice isn't between an American CBDC and a Chinese CBDC. The real choice is between centralization and decentralization. It's between a system of top-down control and a system of individual sovereignty. Seeing that is the first step to reclaiming our financial future. This brings us to the solve part of our briefing. The ultimate answer to the threat of a CBDC isn't a nicer CBDC. It's found in assets and technologies that are naturally resistant to the kind of control we've been talking about. This isn't financial advice, it's a strategic way to think about your wealth in an age of growing government power. The first and most modern path lies in decentralized digital alternatives. For over a decade, Bitcoin and other cryptocurrencies have been developing outside the traditional financial system. And while they're often seen as speculative assets, their real innovation is censorship-resistant, permissionless money. What does that mean? It means that, unlike a CBDC, no government can stop a transaction on the Bitcoin network. No one can freeze your Bitcoin unless they get your private keys. And no one can change the rules of the network without global consensus. The idea of self-custody, holding your own keys and truly owning your digital assets, is the complete opposite of a government-run CBDC wallet, where your funds are held at the state's discretion. While the Trump administration's executive order banned a government CBDC, it also promoted private sector digital assets like regulated dollar-backed stablecoins. This creates an interesting middle ground. These stablecoins offer the speed of digital transactions, but are issued by private companies and, under new laws like the Genius Act, must be fully backed by real dollars. They present a market-based alternative to a state-run system, but they still rely on centralized companies that could face government pressure. That's why understanding the difference between a centrally issued stablecoin and a truly decentralized asset like Bitcoin is so important. The second path is the oldest and most tested form of financial sovereignty: physical assets. For thousands of years, whenever governments have debased their currencies or abused their power, people have turned to gold and silver. These are assets that exist outside of any digital or political system. You can hold them in your hand. They have no counterparty risk. A government cannot turn off a gold coin. It can't be hacked, and it can't be printed into oblivion by a central bank. In a world rushing toward digital everything, the physical nature of precious metals becomes a radical act of financial independence. It is a hedge not just against inflation, but against the ultimate risk of digital surveillance and control. Holding a part of your wealth in a form that can't be tracked, frozen, or programmed is a powerful line of defense. The path forward then is about diversifying not just your assets, but the systems you use. It's about building personal resilience so that your financial life isn't dependent on a single centralized point of failure. This takes a shift in mindset. We need to stop thinking of money as something the government gives us and start seeing it as a tool for our own freedom. The most important thing you can do is empower yourself with knowledge. Do your own research, read the white papers from the Federal Reserve, read the text of the CBDC Anti-Surveillance State Act, learn about self-custody, understand the historical role of gold. Don't take my word for it. Don't take their word for it. Become so well informed that you can no longer be fooled by the comforting stories of convenience and progress. Your financial sovereignty could depend on it. We are at a historic moment for the future of money and therefore for the future of freedom. The digital dollar is being sold to us as a shiny, inevitable upgrade, a natural evolution for the digital age. It promises a world of instant payments, greater financial inclusion, and a stronger America. But as we've seen today, underneath that slick marketing is a much darker potential. The same tech that promises efficiency also enables programmability. The same ledger that promises speed also enables total surveillance. The same system that claims to bank the unbanked could just as easily unbank anyone who falls out of favor. This is the trade-off they don't talk about on the evening news. The story of the digital dollar is the story of a crossroads. One path leads to a financial system that might be more efficient, but at the cost of our privacy and autonomy. It's a path where money is no longer a neutral tool, but an active instrument of state control, where your ability to spend freely can be granted or revoked with the flip of a switch. We've seen the blueprint for this path in Canada and the architecture in China. The other path is one of vigilance. It's a path where we embrace innovation, but on our own terms. It prioritizes decentralization, privacy, and individual sovereignty, the very bedrock of a free society. Recent political wins, like the passage of the Anti-CBDC Surveillance State Act in the House and the clear executive order prohibiting a CBDC, show this path is not only possible, but is being actively fought for. The choice of which path we ultimately take is being decided right now in Washington, D.C., and in the code being written in quiet labs. This isn't a problem for the future. It is happening now. The most powerful tool you have in this fight is your attention and your knowledge. Being informed is your first and best line of defense, because the next chapter in the story of money hasn't been written yet, and you have a role to play in how it ends. To continue this conversation, get access to deeper research, and join a community of people who are serious about protecting their financial freedom, I encourage you to click the link in the description below. And please share this video, send it to at least one person you know who needs to understand what is truly at stake. Thank you for taking the time to be informed.